Good afternoon, everybody. Today I'm chatting with Craig Hemke from TF Metals. In this interview, we discuss how Americans may have changed their view of Canadians thanks to the Prime Minister of Canada. We also discuss the difference in sentiment towards commodities versus equities of those commodities. And we get into where Craig thinks that interest rates could be heading in light of the current macro environment. All right, everybody, enjoy the interview. Joining me today is the great Turd Ferguson / real name Craig Hemke. Craig, thanks so much for joining us today.
The great. Thank you, though, Steve. That's very kind of you.
So we were just talking pre-interview, and I said let's just turn the camera on and have a conversation here. Craig, you've never been one in the past to hold back. I'm curious for you as an American. You're out of St. Louis still. Is that right?
Close. Kansas City. Close.
Kansas City. What's your viewpoint when you as an American look at us in Canada and you see all these headlines about Justin Trudeau and sort of how that evolution of your thoughts about Canada have changed over the last couple of decades?
Yeah, and I've got a lot of good Canadian friends that they're just kind of flabbergasted at it all. Just the draconian stuff, and the kind of whacked out nature of Trudeau's policies. And I think we kind of stand at a crossroads. Actually, I mean, we've got an election coming up here in the U.S. We could continue down the path that Trudeau is forging, just kind of follow along. Or we can try to get rational and drag you guys back into rational leadership. I could go either way. If no one's asking me what I think should happen. So fingers crossed that things don't get away from us down here too.
It seems insane when you watch what's happening in Parliament in Canada, and I don't know if you've seen the exchanges between Pierre Poilievre and Justin, but it's. Pierre will come in like a seasoned trial lawyer with a very pointed question, and Justin just gives some nonsensical answer. Pierre asks a question again, nonsensical answer, and it's gotten to the point where if I were a different country watching what's happening in Canada, I think that we have all just lost our minds. And by the way, a lot of Canadians say the same thing about you guys and Donald Trump.
Yeah.
But I'm not popular in Canada for saying this. I always say to my mom, who's always ranting to me about Donald Trump, I think Trudeau is infinitely times worse.
Do you remember that when you mentioned Poilievre, I think of that one thing where he's sitting there eating an apple, talking to that reporter, just like, you're the biggest idiot, and I'm going to just stand here and eat an apple while I talk to you. I like him a lot. Regarding Trump, I wish there was somebody other than him that was running.
Yep.
But he can only be president for 4 more years. That's in the Constitution. And the stuff that, do you realize, people listening to maybe have heard this in the wind. There's a plan that Harris has to tax unrealized gains, that you have to mark to market every year your entire portfolio. And then, hey, you're up $100,000. So you got to pay $25,000 in taxes. And then that could all go back down. You don't get your taxes back. I say it's the most asinine, upside down, brain dead, foolish tax policy, fiscal policy, whatever you want to call it, anybody's ever proposed. And there's half the U.S. country that's going to vote for it. And he says, oh.
It keeps people happy though. So we've got our third politician here in Canada, Jagmeet Singh, who yesterday it was announced he's walked away from his coalition with the Liberal Party, which means Justin Trudeau might actually be in trouble. And so he's very far on the left to just give you a sense of what's happening in Canada. There's essentially 3 parties, the Liberals, the Conservatives, and then the NBT, and then there's the Bloc Québécois. But what was interesting is that Jagmeet gets on there and he starts giving his talking points, and to me this is kind of similar to what's happening with Kamala, where Jagmeet, he just starts talking about how the problem with the liberals is that they're giving in to corporate interests. And it's almost like we can't acknowledge that we need corporations. Corporations have to be a part of our economy. They employ us, they create productivity. Yes, there's a problem when there's too much concentration or there's crony capitalism, and a lot of that's created by the governments themselves. But it's clear that at this point we're sort of in a soundbite society. In Jagmeet, he's just saying the corporate interest. He thinks he's going to have that Bernie Sanders moment where he's going to resonate with everybody, and he just falls flat. And I feel like it's the same thing with the unrealized capital gains. That it's like, hey, this is going to be a very popular thing for me to say, so I'm just going to say it.
I'm thinking, as you just take steps down that path, why don't we just nationalize all industry? There you go.
Yeah.
And what type of government would that be if the government owned all corporations and all industry? Gee, that's the path we're headed. The good news for us that are preparing for that type of possibility is it's just a perpetuation of this debt-based monetary scheme. And that's just in the process of totally, spinning out of control. I mean, we're paying billions of dollars now in the US just simply servicing the debt every day. It's like $3 billion a day just to service existing debt. It's madness. If Canada continues down there, I mean, you guys don't even have any gold anymore. Oh yeah, it's all in the mountains, right? That's what they try to tell you. If it continues down this path, it's only going to get worse and worse for everybody economically. And the best we can do is prepare for that, because it's certainly a possibility.
You invest in explorers still, right? a little.
Oh, I do. I'm really getting jaded. They're all just, and I don't want to down talk explorers. There's great ones with great opportunities, but so many of them are just money pits. I prefer, my little niche that I like is that kind of junior producer, that's cranking out 50 to 100,000 ounces of gold a quarter, and they're keeping their costs in line. They're not like some behemoth like Newmont with all these different junior executives and departments of such and such, where what they sell their gold for and all of their costs just do this, track each other. And so therefore Newmont's the same price it was 20 years ago. Find me a Wesdome, that kind of company. That's my personal preference. I've got I'll share this with you, Steve. Again, this is just me. I gave up. I was like, okay, I'm not going to try to pick these anymore. I found a company that can manage a portfolio of exploration companies. Last October, my $50,000, so it's not like it's this big, huge thing. It had turned into 30 over about 3 years. And I was like, maybe I should blow this out and do something. Gold was $1,800 back then. It's now $2,500. My 30, what do you think it's worth today? 27. So if I seem a little jaded with the, you just got to be really good. I mean, what you guys can do, what some of the really good newsletters can do to kind of focus you and maybe rather than a shotgun approach, find the specific ones that are in the right spot, the right jurisdiction, might get bought because they're right next door to, one of the majors, that kind of thing. But man, just buying a whole bunch of them, rolling the dice and hoping a couple work is painful.
It's hard. And we crunched some numbers before doing this interview. Like we look at the price of gold over the last 5 years is up 66%. Well, Agnico Eagle, who's like the darling stock right now, is up 33%.
Yeah.
So like the darling, if you're a great stock picker over the last 5 years, you're not doing that now. Over the last year, Agnico Eagle's up 67%. So I may be
still
given some bad context there, but I think that it just goes to show there's not a single major producer that has outperformed just the price of gold over the last 5 years. And the reason you're supposed to invest in these things, at least I thought, was to get the leverage.
Right.
And when we're underperforming them all almost over like any major time period, it doesn't seem to make sense.
Right.
And the other thing too, like I was chatting with a friend right before we hopped on here, and I made a comment to him. I said, he was telling me about how this Explorer that he invested in BC. It's a tiny, like, little nano cap, like 10 million market cap or something. I don't know. And somebody involved with the company was telling him about how they hit a big drill hole, but they're not giving them any numbers, trying to get him to go in and buy the stock. And I said to him, like, look, maybe they did hit a big hole, but even if they do hit a big hole, this is a grassroots exploration project. In today's environment, he's 50 years old. In today's environment, by the time that company, that project ever gets to production, you will be in the ground.
Right.
And that project, that asset, will probably have exchanged hands through 5 to 12 different companies.
Yeah.
That's if they actually did find a big discovery, which they probably didn't. They're probably just trying to scam you into buying stock.
Right. I mean, you get the ones every once in a while, right? Like Osisko getting bought a couple of weeks ago, which I think was very good for the sector because it was an all cash deal. It wasn't one like First Majestic and Gatos, I guess is how you pronounce that.
That was this morning.
Those are, I'm an old stockbroker, man. Those are you want the cash, man. You don't want the shares because it's dilutive and all that kind of stuff. And that Goldfields Osisko thing was really good for the sector because, hey, wait a second, I made 50% overnight. Well, there's probably some more like that. That type of thing is what we want to see. The hard part, like I said, is, you may have, however many millions of ounces inferred, or measured and all that kind of stuff. It's like Newfoundland is a great example. I followed my buddy Eric into, all these Newfoundland stocks. But man, if you can't get that gold out of the ground and get somebody to want it, the old argument was, well, it's not economical. It's $1,700. Well, apparently it's not economical at 25 either. And so anyway, my point in all this, my site, we emphasize stacking metal, gold and silver, physical, in preparation for this monetary shift, the debt-based system that's going to implode at some point, because it just, you can't, once it starts going exponential like this, you can't print fast enough. You can't grow your way out of it. All you can do is just keep throwing money at it and devaluing the currency. And that's good for the gold price. But if you're going to do, and I just say this all the time, I mean, find what you guys do. I know some guys that write newsletters that this is all their sole focus. Don't just sit there and do it yourself, man. Find some help. Find some people you can trust that can help you, pick the pepper out of the fly poop, as they used to say. You got to be able to know what's a good deal and what's not, because so many of them, and everybody knows this, it's in the exploration companies, they'll raise $10 million and they'll go out and drill a bunch of holes. And they're like, oh, we got some good stuff here. And then they'll come back and they'll raise $10 million to go drill some more holes. And by the time it's done, they've issued so many shares and warrants and everything else that the stock, has just goes down. And you're left just hoping against hope that maybe, somebody will come in and take them over and you'll get your money back. The other thing I'd share with that is, if you do this, I'm going to, I got 10 of them here, and I've got however many thousands of dollars and 10, I like them all. Human nature is to say, okay, look at this one's working. It went from 50 cents to 250, or something. It's a sign it's working. And so human nature is to say, okay, here's what I'm going to do. I'm going to get my seed money out and I'm going to let the rest of it ride. That Eric Sprott taught me that's the opposite of what you need to do. When you get one that works, if it's 1 out of 10, or 1 out of 5, double down. If it's working, double down, put more into it. I mean, which is why he's a billionaire and I'm just his dope in Kansas, right? If it actually is working, those are the ones you got to then follow and just keep pressing your bets, because that's when you really make the money. And I'm like, you know what? That's opposite of what I've been doing. And that's why you're you and I'm me.
I got to ask you about silver. You brought up silver, and I recently saw your interview on Sprott Money with Eric, and I thought that was a fantastic watch for anybody who is watching this and interested in hearing more about that silver thesis. But I got to ask you now that I'm in front of you, what are your thoughts on silver? To me, when I look at all the different commodities and somebody who likes to play it through the equities and where I'm going to find that operating leverage, I really like silver, and when we cover it on our platform, the deepdive.ca, we get more views on silver than anything else. I know a lot of these companies. I've told this story multiple times, I think, on other interviews, but I was chatting with one CEO of a silver company last October when silver was trading at $18. This guy looked like he was ready to go take a toaster bath. You could just sense the depression. Suddenly, silver's now $30 an ounce, and the excitement's there, the energy's back. The I'm going to go take on the world attitude is back, and I can't help but think if silver can get a little bit more momentum here and get up into that $35-$40 range, if we're not going to start to see a bit of a new renaissance in terms of people wanting to invest in silver.
Let me backtrack a little bit and talk about the miners before I get to silver.
Okay.
Have you guys spoken to Chris Ritchie?
No, we haven't.
What is it, Silver Crest?
Okay.
Not Silver Corp, Silver. Anyway, he's a sharp dude, and what he's trying to do is to take he's a president, and what he's trying to do is take the profits of the company, and then rather than hold it in dollars, hold it in silver, because he went back and looked at all these silver miners. They don't budget their costs for inflation, and that gets back to what we were talking earlier about Barrick and Newmont and all the rest. They're just getting eaten alive by all-in sustaining costs because they just keep going up with inflation, and the metal keeps going. So, and then they hold everything in dollars, their excess, cash in dollars, and so their dollars are bad, and they don't understand how they're getting squeezed by these rising costs and their margins and everything else. So, first of all, mining companies should, some of these ones we're talking about, they need to take that route. They need to buy back their own product and hold it in their treasury. That also reduces the possible leverage of the silver that's out there, that gets levered up in London and New York by the banks. Right now, the problem with silver, as I see it, is twofold. You'll notice that here's gold breaking out, making new highs versus where it was in April and May. Silver is still 10% at least down from its highs of May. And I kind of like to describe it as like a teeter-totter, where gold's on one side and copper's on the other. And silver's kind of in the middle, almost like a hinge. If gold and copper's going up, gold and copper going up at the same time, silver's going to go up. But if gold goes up and copper goes down, and copper's at least 20% down from its May highs, you kind of get caught in the middle, and silver goes nowhere. So gold's up from May a little bit, copper's down 20%, and silver's down 10%. So as commodities as a whole have kind of struggled these last couple of months because as the global economy slowing and all this kind of stuff, Goldman Sachs put out a note earlier this week saying copper, gold or oil's going down and copper's going down, all that kind of stuff.
But they like gold.
Yeah, but they like gold. That really kind of restrains the excitement for silver, because you got to, the way we price this stuff, you got to have hedge funds and institutions and home offices and all these big investors buying silver futures, right? That's the main driver. It's the future's tail wagging the spot dog. So we need something, a fundamental reason for people to get excited about silver again, and they're not at present. The other part is the current structure of the COMEX silver market is it's not conducive to a big rally from here. I've followed the commitment of traders reports now for as long as there's been a TF Metals report, so 14 years. And the current structure of the hedge funds, call it the large speculators, how many contracts they are long versus how many contracts they are short is not conducive to a big rally. It doesn't mean it can't rally. We could get some excitement and you could get more people coming in on the long side. But when silver really explodes is when you've got people coming on the long side, but you also got a big short position that's getting covered. Because if you're short, if you're a hedge fund and you're short, however many contracts, and your indicators flip, and now you want to be long. Well, one, you got to cover your short. Two, you got to get long. That's two buys. Okay, and that's why all of a sudden silver goes from 23 to 33 in 6 weeks, like it did earlier this year. But right now, that short position is so small, we're just simply trying to get more people, more institutions or whatever to come in on the long side. And again, when you got this thing going on and all these commodities being depressed, there's just not much interest on the long side. And so here we sit.
Yeah. Now, Craig, let me give you a little bit of pushback here.
Okay.
When I look at what the Silver Institute is putting out, for example, this is our 4th year of a deficit.
Yeah.
And we're also hearing, there's some sort of speculation about these new Samsung batteries, which Samsung's a pretty big company here. Like, we're not talking about, some like research that happened with some unknown company. We're talking about Samsung claiming that they've got a 9-minute, 600-mile charge battery coming out that's going to use a ton of silver. It seems like at some point, regardless of what people want to do in the paper market, if we keep having these large deficits year over year, eventually those shorts are going to have to get caught, because the physical market's just going to have to get caught up if these deficits continue to run like this for a few more years. Is it not going to happen?
Eventually, and at some point. Absolutely. That ain't tomorrow, and that's probably not next week either. That's what everybody wants. Everybody wants, I want $40 silver, and I want it by the end of the year, and we're going to stick it up the bank's rear, And as long as there's a COMEX market, moves are going to go 2 steps forward and 1 step back. And we're kind of in that 1 step back mode where everybody's going to buy is bought, and we're just kind of trading water. So no, the fundamentals are spectacular. And the leverage that's used, you can, a real good example of the leverage. I saw a chart from Marion Katusa yesterday on Twitter, is the gold silver ratio that's just gone like this over the last 20 or 30 years. It used to be 30 or 40, and then it goes to 50 or 60, and now what is it, 90? I mean, if anything gives you an idea of the increasing use of leverage of existing ounces in the futures markets and the forward markets in London, it's that. So if you've got existing silver that's levered however many times to make those markets function, then the only way we're going to break those markets is to withdraw the existing silver. And that'll eventually come. You mentioned, again, the ongoing supply deficits at the Samsung thing. If that becomes the industry standard, I've seen some people think that's 500 million ounces a year that would require. Great. And again, as long as we're talking, longer term time frame, all of those fundamentals make great sense. And that's why, as stackers, we continue to buy the dip and stack the metal and all that kind of stuff. Again, the hard part is everybody wants it, we're going to go to the moon, that kind of stuff. And just not the way these markets operate.
Craig, you've been generous with your time here. I got to ask you though, what's your current economic outlook on the world? Do you think that the U.S. is in a recession right now? If you do you think that we're going to see the Fed come down and slash rates quickly? Do you think that we've learned anything, or the Fed and the central banks have learned anything over the last few years from finally seeing inflation for the first time in years? What do you think is happening right now in terms of interest rates, especially for everybody who's out there who may have a mortgage and is freaking out a little bit about how they're going to make those payments?
Well, structurally, rates can't go any higher. I have a daughter that she and her husband bought their first house. I tried to tell them, man, you can just hold off, pay rent for another year. Home prices are going to come down. But they bought their first house. I said, that's fine. You'll be able to refinance, because structurally, not only cannot the U.S. economy, but the U.S. government cannot handle higher rates than what they got to, right? Because again, we're paying now over $1 trillion a year in interest. And as the corpus of the debt grows and as interest rates go, what, it could be $2 trillion a year? Right? So that's a non-starter. So rates have peaked and they're going to come back down. The Fed is behind. Everybody says, how can they cut rates when the stock market's only a couple percent off its all-time? Because Powell's not looking at today, man. He knows that an immediate rate cut, that doesn't mean things get better tomorrow. The lag on any kind of Fed move, even the tiny things that they can do, is 6 to 9 months. Are we in a recession? Everybody's going to, it depends on who's going to define it. But I will tell you this, you can pull up all the charts, for, those Fred charts out of the St. Louis Fed website, and look at the 2s versus the 10, the 2-year notes versus the 10-year note. That inversion of that yield, where the 2-year note is higher than the 10, has gone on for year and a half, one of the longest ever, if not the longest ever. When that inverts, it's a sign that a recession is coming. Doesn't mean it's now. But if you plot those charts from that inversion, the recession kicks in when it uninverts. When all of a sudden you get the steepening and the 10 moves back above the 2-year. That's what's happening actually this week. That's when the recession begins. So I think it's very likely, and again, we get a jobs report tomorrow, the data comes out every month, obviously, that we are in a rapidly weakening economy. Powell will cut, but he won't do it enough. He'll try to say he's pragmatic. You get a 25 basis point rate cut, probably regardless of what the data is over the next 2 weeks. And he's going to be behind the curve. And one last thing, Steve, remember all the transitory crap?
Mm-hmm. Oh, yeah.
Remember? And everybody, that was the catchword. And it was it's all this inflation. It's just the supply chains. And it's all transitory. When anybody that's ever taken an economics class knew there was too many dollars chasing too few goods, right? But they played the transitory game. They kept rates too low for too long. I mean, they're even saying no rate hikes until 2023, all the way into 2021 and 2022. They kept rates too low for too long, and inflation got out of control. Well, now they're playing the same game. Well, maybe soft landing, all these games. And now they're keeping rates too high for too long, which is going to make the recession worse than it should have been, just like they made inflation worse than it should have been. So the Fed will be cutting. That will help gold price, which eventually will help the silver price. It's not going to help anybody else, but there's no doubt in my mind that's the next regime is now toward lower rates rather than higher.
Well, Craig, thanks very much for doing this. For our audience, if they want more of your commentary, where should they go to?
This site right here, we've been doing it for a long time. I write analysis every morning, and I have a summary podcast every afternoon. But the site is kind of a shelter in a storm for a lot of people, most of the members of the site, because we all kind of talk behind the paywall, which is a whopping $15 a month US. And we all try to help each other, sharing information, links that we found, stuff, videos we found. And I think probably not to, downplay what I can do, but it's a lot of the value of the site is just having access to be a part of it. So tfmetalsreport.com, like I said, you can sign up for a month, see if it's worth it for $15. But I think in times like this, with all the other things you could spend $15 on, I think it's a pretty good deal. I'm biased, admittedly, but I think it's a pretty good deal.
Well, Craig, thanks very much for doing this. I always appreciate you taking the time to do this, and hopefully you'll keep coming back on here in the future and breaking down how the precious metals and particularly the equity markets related to precious metals is going to look as we see what's hopefully going to be some more forward or some upward price momentum in those precious metals.
You got it, Steve. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.